Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. So, very interesting day came in today. Futures were flattish after the reversal that we saw in many sectors yesterday, giving us some clues to maybe get out of some stocks, maybe get short, that we could be in a position to work off that overbought reading a little bit more. And you did get some downside follow through. So if you did make adjustments at yesterday's pivot points, you were out of the way for this move to the downside. Now the question is, where can we find support? I know today I came in net short besides my options, which were actually some good options. I was long on my disclosures, SanDisk and MU. I sold more than half my SanDisk calls. It's still there, long and MU. But anyway, and then also came in short the spiders. So at this point, no spider position, and I didn't take any other longs as far as equity positions because I wasn't sure what we would see from Netflix, and I didn't really love the pattern that we saw with Netflix as far as the potential of that head and shoulders top with 3 other gap ups in 3 prior quarters. So the question was, how many times could it do that? So anyway, let's just go over some levels in the action. So you look here real quickly first at the SPX, you'll see here we are coming back in and basically retesting the spot that we kind of cleared. And at this point, if you sold into this red dog reversal right here, right around 2020, maybe you covered some into this 2-day methodical move. Question is, do they do a little bit of an overthrow down to here or not? And how long does that potentially take? To me, I'm not sure. So I don't like being short typically, but so after 2 down days, I'm just not, I covered even if we can go here. This is where I'd rather see if I could be a buyer. The IWM let us lower yesterday, and it gave you a second down day. This also kind of reversed right into resistance. There's your outside day, trade above a prior high, close below it. This is now below the 8 and the 21 day, relatively weaker. So you'll see what happens, what kind of open we have tomorrow. And what we'll do is we'll write down today's low as the pivots. What happens around 112.71 tomorrow? Do we open below it, come back through it, and get a higher low, or not? Same thing goes with the spiders. Do we come back and retest a little bit lower? The oscillator that was plus 55 on this day is now only plus 10. Here's your outside day in the spiders. Here we are at the 8th day. Chances are we might be able to get down to here, and this is where I think I'd rather be a buyer versus starting here and then not be able to hold it just in case. You look at other stocks out there. First of all, let's go get into Netflix. Netflix pretty much priced for perfection. People are like, you went over a head and shoulders top pattern today in the morning call. What does it look like? What's the measured move? I was like, well, this is the right shoulder, the head, a little sloppy looking. This could be, left shoulder, head, right shoulder. This really was more of your neckline. So with that being said, from 130 down to 103, that's about 17 points. And the option guys were pricing in about a 17-point move. So from where did it close today? At 110. That gives you a move down to about 93. And that's where it touched, actually. Look at that, a little quinky dink. That's where it kind of touched right here. So anyway, it's a little bit off the lows. Let's see, where is it trading right now? Netflix is trading at 99.37 and now at 100. Which is right around here. So we'll see what happens tomorrow. It gave you that quick swoosh down into that prior pivot. That's why it's good to have some levels ahead of time. That's your 93.55. That's your 93.55. That's also the $16 measured move or so that options straddles priced in, and now we're back to 100. So a little bit in no man's land. We'll see how things open. I'm sure, if Netflix stays down there, you might get a little bit of a movement down in your Amazon. Here's upper support 1. Here's your 21 day. We'll see, where we open tomorrow, but that's some big support down at like 531. Today couldn't get above resistance, and rightly so, considering I wanted to see what Netflix would do. Okay, and Netflix again is off the lows, so we'll see how this hangs in there. Google, gave a bit of a topping tail, but think about the move that it had from the little flag into the 21 day. Here was yesterday's move that we made some money on, and today it pushed above the prior high and kind of came in. So that's your sell signal. If you think about 6 days ago, this was at 654 into 690, 40 points in this market. Hopefully it took a little bit off, and now you'll see maybe if it comes back and retests this spot for a potential entry. Facebook's been a little bit sloppy, a little two-way action across the board, not ready to break out. These things probably will not break out unless they themselves come out with, big-time numbers, big-time guidance, and we'll see if Facebook could do this down the road. As of now, still one of the better-looking charts. Twitter, not really much going on today. Did hold it. Actually, Twitter gave you a little red dog reversal. If you look at it here, this came in here, came back above it, a little bit of a flag. So it's still in the game. It seems like Dorsey's trying to do what he can to, keep, good news flow out there to keep the shorts at bay. At some point, I feel like this thing will let go. The question of when. So at least it's tradable now with better moves. So we'll see what happens. You could trade versus this level. Maybe if it opens down tomorrow, you could buy it for a bit of a trade. The big story today was actually your what's it called? Your Walmart. Walmart came out with news and they missed and they guided everything down. You had a lot of time to short it. Went back and forth, and then someone's like, hey, look at the red dog reversal in Walmart. I was like, that's a red dog reversal. No one thought this would have happened, but it pushed through this prior high, right? After a big move, pushed through. This thing went from, 63 all the way up to 67, pushed through, squeezed some shorts above 67, came back below. If you shorted there and walked away, woo, biggest down day in 17 years. Obviously not the easiest thing to do. But anyway, then you could have drawn your trend line here, broke it right away, and now it's below lows. But, the bigger thing here is you think about, just trends, right? I know my wife. I don't think my wife has stepped in a Walmart or a Target store in a year or two. And I know for every Christmas, there's no spaziering for Christmas gifts. It's all online, all little round boxes coming. So if you think about the downtrend, if you look at Walmart that it's been in, this is one hefty downtrend. Okay, this has been just trending and trending and trending, right? What do I talk about? If it's below the 8 and 21 day, it's not a swing trade. Well, that was broken right there. And if it's below the 200 day and stays below the 200 day, it's not even an investment. Well, I know it's Walmart, but it doesn't matter. It's just a stock. Here's when it broke the 8 and 21 day. Here's when it broke the 200 day. You could have been out of this thing if it was an investment of yours at 80 and not, getting crushed down here at 60. Okay, down in the dumps until everything is reclaimed, it's only a trade. And now look where it went down to. Guess you'll see tomorrow what happens with Target. Target wasn't as weak, but this little ascending channel has now been broken here. So we'll see what happens versus this. Home Depot has been stronger, and it came off with a little fear that some same type of thing could happen to a lot of these retailers if they have to raise the minimum wage, which I'm not even going to get into, which I'm not against. I think minimum wage should be raised. Anyone that works deserves to make money. I just don't like giving money to people who sit on the couch. But anyway, here is this little range that broke, so now you can trade versus that. As far as the banks really didn't do much. JP Morgan, opened lower, went a little bit lower, didn't fall apart, but still, I guess above this range for now. Same way, Bank of America opened up and just kind of faded into resistance, and nothing too compelling. It doesn't seem like these banks are going to be the place to be, as rates are most likely staying low and no lift off, so it's hard for them to make money. Still below all the moving averages, so banks aren't anything great. Where there was some better action was in the energy names. The XLE was strong today. XLE actually turned up, after a 3-day pull-in. So if you bought some XLE today, at least you bought a dip into the 8-day, and now that could be the new trend above the 8-day, and now you'll see if it makes a higher high. If you look at CVX, if you're looking for a leader or something that's maybe giving it clues that that's going to go above it, look at the CVX. Held the 8-day, turned a little bit up, and maybe it clears this to get towards that the 200-day. XOM, I think, already did it. XOM, is already came into the 8-day. The 8-day is such a great tool. Okay, this is when you had your channel here, it broke above, reclaimed the 8 and 21-day right here, and now it's starting to ride it. And that means you could ride this trend until that changes. Using a tier system, and this also looks like it's about to break above this and head, towards the 200-day. Gold, wow, what a move. We've, for 2 weeks we've been talking about how, it's been buyable on dips and that this time looks different and that support has been held, and, starting from this gap up basically here, that put it back on the map. And just like I said with the, the energy group, what happened? It gapped up, went above the 8-day, and it's held above it ever since. Now it extended through the 200-day, so that's a new trend. You could be long things that are above the 8 and 21 day, and that's what gold is right now. A tiny bit extended here, but just saying in general. Did it here also before that outside day, and it kind of failed. And now for now, you would think that the GLDs, after this massive 2-year bear market, could shake the tree a little bit. Here is your, this trend that was broken and support, and now, if you got rid of your gold here or here, and you bought back into what you think could be a new move, well, here it's looking to break above this descending channel, above the 200-day for the first time. Maybe you get at least 120. That'd be a nice tradable move from down here if you're not caught. And then who knows, if it really catches fire, could go even a little bit higher than that. So big resistance, second resistance. But as of now, something different. Woke up on a gap and go. Gap and go sometimes wake up stocks and even sectors, and that's what happened right here. And then boom, 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 boom. Now it's above the 200-day. So maybe, if you were long, hopefully you trimmed a little bit. But if you were just thinking short, you could probably wait until you get a little bit higher there. Let me take a quick look at Netflix to see how much off the lows it is. It is, okay, it's at 102.55, down 7 or 8. So not an explosion or a disaster, just down. And at this point, we'll figure out what's tomorrow. We've had 2 down days, very controlled. Walmart might, instill the fear of, into some investors. But if you look at that chart and you follow technicals, you should not be long it anyway. It's just probably in a lot of hedge funds and a lot of mutual funds, and we'll see how that affects them. Hopefully, maybe they have a technical analyst there too that showed them to get out of it. The same way you really could have gotten out of the XLE, just to give you another example, when this broke below the 200-day here. That's when this broke below. This was your active trend that broke right here. And then this is when your macro trend broke. Okay, below the 8 and 21-day, it's not a swing, especially when you have a head and shoulders pattern being formed. Okay, and then below the 200-day, you get out of Dodge. And then that was at 90. Look where it is now. And look at WYNN, another example of a stock that people loved. But if you took your little love out of it, or your bias, when it broke the 200-day right here, you could have been out of it. Or if you missed that on the retest, you could have been out of it. And that was at 180. Look how far down it came. So markets could make you money, and they can be very dangerous if you don't have a set of rules to play by. My set of rules is above the 8 and 21-day, you could be long it, maybe you swing it, hopefully it's in a stronger trend. Breaks the 8 and 21-day, get neutral, maybe look for some short opportunities below the 200-day, stays below the 200-day for 4 or 5 sessions. It's not even an investment. At some point down the road, maybe it reclaims it, it repairs itself, but until then, it's probably, downtrend and little active trades here and there with maybe a red dog reversal and then the HL setup, but that's about it. At this point, I did put out there, that little gut call at the, at 3:30 yesterday. I said I think we see 198.50 to 199 before 202.50 to 203. The reason being, I thought short term yesterday could put some pressure on the market. I did cover. I'm not here to toot my horn. I'm just saying that every now and then when I feel like we're going to get something more, and you want to do it more than just a 3 and 15-minute bar. This one actually, didn't fall apart, but it did hit 198.94. So it was a better short here or sell here than buy, which is what I tried to keep you guys from doing. And now at this point into here, you could have covered, you could have stayed short, or you could have nibbled a little bit, because if we gap up tomorrow, you'll be upset that you missed your little pull-in. But I do think that this would be a more compelling spot. But for me, I just don't. I have a hard time staying in that for that length. But I'd rather see if I could be a buyer here, as I do think at some point, we trade into this area come year end. But we'll cross that bridge when we get there. Right now, same way the bears took somewhat control here on this outside day when this wedge got failed. Here you have from a higher low, not as extreme. So the bears have short-term control. It'll be up to the bulls to take it back, and if they take it back from a higher level, then maybe the next time we get up here, it actually gets a little bit more traction. But we have a lot of earnings between now and then, and at this point, the dollar broke. Remember I showed you the UUP here. It was a good thing to see. That's when the narrative changed. That's when the commodities got better. That was, on the morning call, I don't know, almost a few weeks ago, right in here, that's when the dollar broke. And now look at that. The dollar is below the 200-day. The U.S. dollar is below the 200-day. Below the 8 and 21-day, you get out of the way below the 200-day, means severe problems. So if the dollar doesn't reclaim this, short term, chances are we're going lower. And what does that mean? Lower dollar, probably higher commodities and softer, stock markets somewhat. So, just keep that in mind, and we'll see how it all works out. We'll go into it day by day, and in my note, hope all is well. See you tomorrow.